Hi, this is Pat Moorhead with Moor Insights Strategy, and we are here for another awesome 6-5 live podcast, episode 125. Man, it's great to be in Austin. My plane was a mere 4 hours late coming in from New Jersey last night, but I am glad to be home, slept in my own bed. It was a kind of a quiet week. I only did 2 cities, right? We did, where were we? Charlotte, North Carolina. Doing the recording for Honeywell CEO Darius Adamczyk for the 6-5 Summit that starts next week. Pretty psyched. And then off to New York, where I did a keynote for LogicMonitor Elevate. How was your week?
Well, I was with you for a good chunk of it. So I was off to see Darius with you, and that was a great conversation. I thought actually one of the really provocative, really thoughtful. And so I think everybody's going to really enjoy that as I believe it's their day 3 opening keynote. Now we have 71 sessions, so forgive us if we don't know exactly when each of them is going to go live. But let me tell you, this event has absolutely met the expectations. We crushed it, dude. And if I look a little tired today, it's because I am a little bit tired today. We've been around the globe, all over the country, a combination of face-to-face, on video, you and I together, you and I separate, coordinating these things. And let me tell you, we really hope you enjoy it because there was a lot of love that was put into this thing. We do it because we really want to be able to, show the world all the great things that tech is doing. And we believe innovation is endless. No matter what's going on in the broader economy, there is so much to be excited about in the tech space, Pat.
I mean, look at these speakers. I mean, we got CEOs. I think we have 25 CEOs and 30 people on the boards of directors. I mean, Daniel, you summarized the event once. You called it the remote Davos for tech. And by the way, I use that everywhere I go, and I give you absolutely zero credit for it. But I really do think it captures exactly what we're trying to do here is let's get the best speakers with the most relevant and hard-hitting topics that are out there, and then we just rock and roll. You talk about the love that went into it. It a lot of blood, sweat, and tears. I always underestimate the work that goes into that show. But if I look at year 1, what did we have? 30 speakers first year, and then the second we had 40. Now we have 71.
Yeah, I think it was like something like 30, and actually we got almost to 50, I think, in year 2. So we're kind of scaling about that much. And, we're going to have to reflect in a year about what's going to make sense in terms of size, scope. We know a lot of events have gone back to live, but with this lineup, we know that trying to get this group of people to all, come into one location for one specific set of dates would be nearly impossible. So I tend to think that the long term is still going to be about getting that group of speakers and making this event different by the quality of names and conversations that we're going to drive.
Yeah, it's not about the numbers. It's really about the quality. But I think this year I'm hoping we accomplish both. And we added a bunch of new segments, like new tracks like quantum, ESG, automotive, electronics. So anyways, hey, we have a show. We're here to talk pods, not to schlep the podcast. By the way, the summit is free to sign up for. It's paid for. It's paid for by the vendors. So this content is free to you. It's going to be gated on the site for 2 weeks. So get in there and sign up, folks. But hey, we do have this awesome show. We're going to be talking AWS, HPE, HP, Salesforce, Pure, and LogicMonitor. Whole lot of conversations to talk about. So let's dive in here on Amazon.
Hey, Pat. We got to do one more thing, buddy.
All right.
Never mind. We got to do our little disclaimer. I forgot it last week. And actually, no, I didn't forget it. I did it like in the 6th topic. But no, before we catch it, let's jump in. But just remember, everybody, this show is for information and entertainment purposes only. And while we will be talking about publicly traded company and their earnings, please do not take anything we say as investment advice. I said that really fast because we got a show to do.
All right. So let's jump in. So Amazon Graviton 3, wow, what a what a legacy of first-party silicon that Amazon has been bringing to the table. So first off, Amazon is a embracer of heterogeneous computing. I mean, not only do they create their own technology with Graviton, Inferentia, Trainium, and also the silicon that goes into into Nitro, but they also, of course, work with Intel, AMD, and NVIDIA. So they're kind of an equal access. And oh, by the way, they're the largest consumer in the public cloud of these resources as well. So they're big. So Graviton kicked off a few years back. They followed up with Graviton 2, and now we are here with Graviton 3. So what does it bring to the table? I mean, it brings higher performance, and it brings lower power, which is exactly what you want in semiconductors. They're using the full-up Neoverse core as their base core, and they've really beefed up their memory subsystem with DDR5, and they've also beefed up support for AI with what's called bfloat 16, which I think provides a order of magnitude improvement in terms of performance. How hard is it to move over your workloads? It's a mouse click from your current Intel or AMD workloads, or Graviton 1 or Graviton 3. The cool part about this, I think the coolest part about this, is that it opened up Graviton to every application that you would want to run. And one of the things I do appreciate with what the company's done with Graviton is they're very conservative about it, right? In Graviton 1, they had maybe 4 or 5 applications or workloads that they recommended. Graviton 2, it went to around 10 to 15, and with Graviton 3, it's actually endless. I mean, I'm sure there's some applications that it can't run or it's not optimal to run, but we'll have to see. And the second thing that I thought was impressive was how easy it is. I mean, if you have a natively written app within an IDE, you don't have to make any changes, or minimal changes. The company, in fact, last year, Dave Brown from AWS kicked off the Graviton Challenge at our event, which was really the idea of focusing in on really to demonstrate how easy it was to port applications over. The only recompile you need is for like a C# or a C++ application. But if it's a modern cloud app, it's minimal. So, Daniel, good stuff.
Yeah, I think the continued evolution, higher performance, more efficiency, more dynamic offerings, different sizes and options, for how many cores and CPUs that it offers. I think that's going to all be really important. You got, improved floating points, you got improved ML performance, which is something that Amazon's really, trying to lean into with AWS. And of course, wants to make sure it puts its stake in the ground that it's, it's got leadership there. That's one of those things where sometimes people say, hey, Google's got that side of the house nailed down. Well, AWS wants to raise its hand and say, we're doing good work here. And by the way, you and I will be at Remars doing some video, which is the big AWS event focused on ML and their AI business. So you'll hear more from us about that really soon. The only other thing I'll add is, we really are at this interesting inflection point for ARM-based instances in the public cloud. AWS was early, it was first, it had made some really smart investments. It got these into market first, but we're seeing now announcements coming from Azure. You're going to see it coming from all the rest of the public cloud players. They're going to build on ARM. Easier it's made to move those cloud native workloads. And then you're seeing technologies being developed in the DevOps space to make it easier to deploy workloads that aren't necessarily as native for for certain cloud to be easier. And that's going to be an interesting transformation to see, will that happen? because right now that's been what's slowed down a lot of migrations is, the refactoring. So we know ARM is going to present a great challenge for x86. We know x86 wants to keep innovating, and Pat Gelsinger is continuing to push that leadership story. So is Lisa Su. So I love watching this because, like I said, in the end, the customer wins. So that's what I'll say, because you hit most of the good Graviton 3 talking points.
Yeah, it's great. So I wrote an article on Mars. I interviewed their CMO, AWS CMO, and also head of data and AI, and we talk about REMARS and what does Mars stand for? Machine learning, AI, robotics, and space, baby. I can't think of 4 cooler nerdy topics to get in there. Not just nerdy, but heck, space is just, and Elon Musk has really driven the biggest change behind people and how they view space. So super cool.
Sure.
Daniel, let's hop to the next topic here, which is, did you want to do a boomerang on that one?
No, I was just going to say, do we tell everybody we're going to be broadcasting from the Blue Origin?
Oh, I thought you did.
Oh,
but yeah, no, it's great. No, that was part of the deal. We'll do some videos, but it has to be inside of a rocket ship, at least breaking the stratosphere. So
what does Daniel Tosh say? That's a true story I made up.
It's true. No, I like that. So no, that's good. See, I knew you'd get into this podcast, Daniel. Let's move to the next topic. HPE announced their earnings, and they announced the first exascale computer alongside with AMD technology. Wow. So Daniel, why don't you dive into this one?
Yeah, I'll start on the earnings, and then you can finish me off, and then we'll talk a little bit about the supercomputer. So the earnings were okay. I mean, this is one of these weird periods of time where we know there's some contraction, there's some economic headwinds, supply chain issues linger, interest, you got currency exchange issues, you got, China shutdowns, you've got war. There's all kinds of factors. And so we have definitely seen some companies outperform handedly. We've seen some companies struggle. And this has become a bit more mixed. On the recent All-In pod, Chamath talks about alpha and beta. And it's interesting about how some companies have been able to grow endlessly during the pandemic because beta was high. And then alpha is really being able to function in any economic scenario. And that's less about HPE, but more about we're starting to see this decoupling of companies that are exploding and growing, even though it seems tougher, and companies that are finding more headwinds. I really like what HPE is doing with the GreenLake business. And so when I'm kind of assessing the earnings, I spend a lot of my effort there. You really have to look at HPE as a sort of a startup within a big, kind of monolithic tech company. Because what Antonio Neri's been focused on since 2018-19 has been GreenLake, has been subscription, has been as a service. And so when you start to make that pivot, and we've seen it with companies that go from prem to cloud, like Microsoft, when that pivot gets made, there's always going to be this interim period of time where revenue growth is going to potentially slow because you go from large CapEx deals to smaller cash flow OpEx deals. And so I'm looking at HPE and I'm looking at GreenLake and I'm saying, look, I think you're going to see some resistance to growth. And part of it is because, they got to execute and perform better. Part of it, though, is because they actually, on their GreenLake business, are executing and performing quite well. 100% plus growth in their as a service business again. So congratulations to them on that, and Keith White and the team on that accomplishment. But in some areas like storage, where we did see Dell, for instance, have a really big quarter, we saw HPE being down. And so, I think there's got to be an answer to that. I think, the market needs to say, hey, what's going on here? Is it falling off, or is it because more deals are going to as a service? What is the, divergence of those sales? Or, Pat, you mentioned HPC being off a little bit there. What happened there? And so that's one of the questions we're looking for from HPE. Now, on a more positive note, the company has continued to execute very well at the edge. That intelligent edge business that rolled out has continued to perform well, has seen, close to double-digit growth. And so, as a whole, as I sort of weigh the outlook on the company, I think you've got to kind of balance those two things. You've got to balance the sort of traditional legacy, large OpEx or CapEx IT business And then you've got to look at the GreenLake business. If you're looking at that traditional business, I think it's going to be a harder road ahead. But I think the company already identified that. That's why they pivoted. That's why they're transforming the business and putting all their eggs into the GreenLake area. And so if GreenLake is growing strong, I think the long-term trajectory for the company looks pretty good. But that is the number to watch. If that number starts falling off, then we really have to start to worry about what the long-term looks like.
Yeah, it's interesting. I saw, by the way, I agree with everything you just said. I think this quarter was primarily about supply chain. Every single segment, if you look, sorry, I'm sure you looked at the slides, but in the slides, supply chain was placed in every single one of those. So I think, you know, there's some companies that seem to be managing their supply chain pretty tightly. You know, some industrial companies didn't bring it up once in their earnings.
And how do you account for that? I mean, I'm sincere. Like, you know, that's really hard because if you're like an outsider, you know, you've been inside the walls of company, like when you were at AMD, and you've listened to this and watched this and you understand this. But what I'm saying is, you're an investor and you're saying, well, how does one company in the exact same space, Pat, say nothing and grow, and another company sitting there? And there's been a couple now that have come out. And sorry, I had to jump, but I want your take on this.
Yeah.
And they say that it's all the problem, and you're looking and you're going, well, how does one company do so much better than the other?
Yeah, so all things equal, the larger the supply chain, the more you buy, the bigger deals. Sorry, the lower prices you can get, and the more power you have over the supply chain. I don't know all of these companies' individual strategies. So, for instance, you can lock in supply 9 months from now if you're willing to pay for it, and if you're willing to roll the dice. So part of this is an educated gamble in some cases. Companies like Apple will invest billions of dollars into their suppliers to make sure that they can get supply of things like chips. They lock in that capacity in sometimes years in advance. So I'd have to, you know, do a paid research project to answer that completely. No, I know. But some of these companies are just smaller, right? When it looks at, I mean, an order of magnitude smaller in the amount of commodities that they buy. And I think in this case, I think it has a lot to do with it. So HPE is buying a ton of stuff. They just seem to have a different strategy on that. The only adders on the earnings, I mean, there were some, you know, another reason why I think this is a big supply chain is they have record backlogs. Okay. In storage, record backlog. In compute, ASP was up 20%. And what does that mean? Okay, I can't get supply, but so I'm going to shift mix to a higher ASP configuration. Orders were up 20%, right? One thing, one net adder here is that Russia did impact them, $105 million. Looks like a restructuring charge. No idea if that's going to be a continued charge or a one-time charge. But yeah, it's interesting. One thing I'm going to be looking at the future is, you know, HPC had actually lost money. And, you know, the description given in the slides were really about backlog of awarded contracts. They missed delayed acceptances. Okay, and that's code for either I showed up late or I couldn't get this thing. I couldn't get this thing working. So they say they've got $3 billion in backlog, Daniel, for this HPC group. So we'll see. But hey, let's move. Let's talk about, I think, quite frankly, a whole lot more exciting than HPE earnings, and that is that HPE delivered the first exascale supercomputer on the planet called Frontier. The core technology inside of this was obviously all the goodness of Cray and the benefit that they bring from a compute standpoint. CPU and GPU was delivered by good old AMD. who, by the way, on the GPU side, really hasn't made an indelible mark in the enterprise, anything near what, let's say, NVIDIA has done. One thing I loved were some of the claims that HPE made. It said it's faster than the next 7 most powerful supercomputers in the world combined. I love stuff like that, Daniel. The other thing is the balance of power shifted from Japan, I think it was called Fugaka, a supercomputer, to Frontier here in the USA. So USA, we've got to feel pretty good, pretty good about that. So great stuff going on. I think this is front and center Cray acquisition that HPE made, which I think we're starting to see the fruits of the labor, and we'll see how high they could drive the profit in the next few quarters based on that $3 billion backlog.
Yeah, absolutely. That supercomputer is pretty special. It's changing the world kind of stuff. So like yeah. You can't really gloss over that. And sometimes it's easy to, because you don't realize how important these kinds of breakthroughs are.
Yeah, it's very impressive. So let's move to the next topic, LogicMonitor Elevate. So first of all, if you're not familiar with LogicMonitor, they are an end-to-end observability company. And if you're not familiar with observability, and Daniel, I know you're gonna chime in on the bigger picture after I talk about the announcements, but essentially, it's the ability to measure and observe and do something about the tens of thousands of signals that you're getting from your applications, infrastructure, and devices. LogicMonitor, I believe, is unique. They can not only do the public cloud, but they can also do the private cloud, as well as legacy infrastructure out there. And they brought out, the proverbial single pane of glass, a single pane of glass observability platform called LM Envision, where all of the end-to-end observability that I talked about, you get on literally one display on your monitor. And they also improved, I would say, they improved the UI, so even normal people can use it. The second thing they did, and I was actually part, in all full disclosure, I did a keynote there, and I was talking about this whole notion of readiness and resiliency. And what the company put together was this framework for CIOs, people who work for CIOs, to look at themselves and ask. It's a set of 7 categories with 40 KPIs. Ask themselves specific questions, kind of a self-diagnosis of visibility, resiliency, trust, experience, consistency, innovation, and the human factor. So super exciting. I'll put the link in the show notes, but my big message to the audience there was, IT, great job. You're more important than ever, but CX and the ability for what you do to impact customer experience has put you in the crosshairs of not just the CIO, but the CEO and the board of directors. And here is a good checklist of things to look at yourself with, maybe even self-report to the CEO on this idea of resiliency, which in CEO speak is about confidence, right? The confidence that you're going to have 9 nines when you need it. And then if something does break, you're going to find it before your customers find it, or the VP of sales. And you have an answer on what's going on. And then you can do some closed loop correction and automate so that problem hopefully doesn't happen again.
Yeah, absolutely. Basically, observability really comes down to understanding the health and state of data in your system. Um, there's a few different ways to define it. One of the things, I have a really great conversation at the 6.5 Summit with the head of observability for Splunk. And we basically talk a lot about the fact that there's a lot of misnomers. You got DevOps, SecOps, IT Ops, you got monitoring, and now we've got observability. And observability has become this really exciting, interesting area. You're seeing, of course, companies like LogicMonitor and Splunk, and then, you're seeing companies like IBM making acquisitions. You're seeing, Cisco getting heavier into it. And of course, you can expect the hyperscalers will get more involved in it. Another way I've seen it kind of well defined is talking about full fidelity monitoring and troubleshooting across your applications, infrastructure, and user interfaces. And the reason I'm pointing this out is because sometimes I think when we talk about observability, it just goes right over people's heads. Like, we tend to almost place it inside one of these other things. Like, we say observability and people go, oh, monitoring. We go observability and people go monitoring with AI ops. You know what I mean? And so it is a little bit of that, but it's really about, understanding your entire data and application ecosystem and making sure that your systems are up, they're running, they're secure, and that your business is, you are in control of your business. And then, of course, you're going to see probably more and more security layered into this as well over time. I wasn't at LogicMonitor. I did not get the invite. So I'm going to sit and pout about that for just. Let's do a moment of silence.
I mean, Ray Wong was there.
I'm going to do a moment of silence. You were there. Ray was there. I saw Ray running around the stage.
Ray, I've never seen him present, and he was literally running around the stage. I mean, like, back and forth. I was wondering why he had purple joggers on, and now I know.
Yes. And, so I saw it, and it looked very interesting. So the good news about this particular segment is that, you're going up there has really brought them into my purview, and considering how much we cover observability and how much time we spend in this particular space, it's going to be good to follow this company a little bit more. It's a big market. It's a big opportunity. It's going to be critical as companies continue to deploy more complex infrastructure, multi-cloud, data in disparate destinations, locations, on-prem, clouds, and at the edge. We're going to need more and more high-quality solutions for observability. That it's going to be a growing market, and I expect that you and I are going to be weighing in on this a lot more.
Yeah, I totally agree. So it's pretty exciting. And to be honest, LogicMonitor was not even on my radar screen, right? I was following Observe. I was following Splunk. I was following Cisco, with AppD. But no, it was a good. It's always good to get an indoctrination, and it's funny. I helped them with this the project on the IT assessment, and yeah, interesting stuff. Hey, let's move into we've got the rest of this. We're going to be talking about earnings, so let's jump into Salesforce earnings. Let me guess, 20% growth, and they just nailed their numbers, right?
Yeah, I think it was largely a winner. And right now, winners and losers are decided by the after-hours market action when earnings are announced. Sometimes you see an earnings and you go, oh, because, for instance, I believe they kind of trimmed their revenue forecast a little bit for the year, but they guided up on their profit. And this is, by the way, the particular market response to that is such an indicator of where we're at in this current economic cycle. People right now want cash flow companies, they want profit companies, and they want robust earnings that are predictable. Companies like Salesforce are about as predictable as earnings can be. You're up there with like a Oracle, maybe, in terms of having predictable revenue. No matter what the economy does, nobody's getting rid of their database. No one's getting rid of their ERP, and nobody's getting rid of their CRM. And so, that was a really, important thing to see. Now, the growth, really good, really stable, Pat, 24%. And we put an earnings note out about this. And look, company was up year on year. They were above estimates. They were strong on profitability. They raised their profit guidance for the full year. And they're growing in the right places. And so I literally could pre-write my earnings notes, Pat, with sales and service clouds growing at about 20%, maybe a little more, a little less. But these are now, I said this is a little bit of a shift, an impasse for Salesforce. they went for a long time to sort of being this cool, fast growth SaaS company to now being this mature, incumbent company that sort of leads its space, that has disruptors trying to come up and eat its lunch, but yet it kind of continues to grow at a really healthy clip. That's the good news. I mean, that's actually the really good news. Now, the other interesting news is over the last few years, the company's been very aggressive and inorganic. So you've seen the Slack acquisition, a lot of question marks on that. I still think it can be a very big and very successful acquisition, although I'd like to see more integration to compete with Teams more directly. I still feel like it's sort of living a little bit off on its own. I've heard, some of the Slack first pitches, and I think it's got the trajectory, but it's not on par yet. So that's going to be something that the company's going to need to zero in on and focus on. But platform's growing 55%. It's a $1.4 billion business on the quarter. And this is the area that's really kind of exciting to watch. You hear whether it's Zoom or Salesforce, all these SaaS companies trying to play platform. And so, the Hyperforce platform is starting to take off with MuleSoft and with Slack and these integrations. And by the way, I think we're like 2 to 3 years away from platform being its biggest segment.
Interesting.
Which is interesting. Now, I'll give you something maybe a little bit to the market maybe could, be a little bit bummed out about. MuleSoft and Tableau, 2 huge bets for the company. Actually, the slow growth right now, their whole data segment was the slowest growing. Now, I would have expected those to be faster growth. So if I'm kind of trying to nitpick something I don't love is I'd like to see, they're at 15% and they're not large. They're the smallest segment and they're growing the lowest. These big or inorganic bets, Pat, and you and I have had some very long, hardy discussions about Salesforce running out of sort of organic growth and needing to get inorganic. And so when you do that, you want to see it grow faster. So now we're seeing Slack, MuleSoft, Tableau. Are they growing fast enough? Or are they complementary enough to scale platforms, scale these data segments? Those particular areas are kind of to be determined. Last thing I'll say is that this company is benefiting by its segmentation. It's now got it's presented itself as a $284 billion addressable market by 26, so over the next 3 or 4 years, with about a 13% category growth rate. So it's not a hyper growth category anymore. And that's kind of what I was talking about this inflection point between being this fast growth company and being sort of this really stable, mature SaaS company that serves, the vast majority of enterprises in one way or another. So overall, good performance. Like I said, definitely not a negative given, we've had to kind of talk about some tougher performances, but that guidance down on revenue is something to keep an eye on.
Hey, did you get a sense on the platform and other if most of that growth was from Slack?
No, it wasn't spelled out clearly. And in fact, I think there's still some maturity in how Slack is going to be rolled into the platform. They have announced a series of Slack first initiatives and sales, marketing, services. And I do think that is going to be the future. I really think that, I believe Mark Benioff calls it the digital HQ or the digital headquarters. And by the way, we've got a lot of debates. Right? Elon Musk is saying, come back to the office or you're fired. We are not in a world that has fully accepted hybrid work as the thing. We're in a world where we're somewhat divided on that topic. But the integration of CRM, Slack, your ERPs, the power, I'm saying the power platform in the sense of Teams, those integrations to create your epicenter of work is what I think Slack has to become in order to compete with Microsoft. Microsoft is ahead of the game right now, and that's got to put some pressure. The acquisition of Slack was a bold move, but unless they find a way to make that happen, I'm not quite sure you're going to ever fully be able to figure out how to justify that $27 billion spend.
It was definitely a defensive play related to Teams,
but it could go offensive,
and they had to find a way to capture that data of people and customers who were chatting back and forth and getting stuff done. What I'm wondering is how long can Salesforce go without getting into HCM, SCM, all the different types of things that, let's say, Oracle and Microsoft and at least in the mid market, NetSuite and Zoho do, because they pretty much are a suite, right? It's all pulled together, and in a happy world of frictionless data sharing, you know, your IT shop could leverage, let's say if you have an Oracle SCM or HCM, and then, you know, you're all in on the Salesforce platform with everything else, you can make it happen, but it certainly isn't seamless. And it's pretty much up to, you know, the Oracles and the Microsofts to provide those APIs that can be sucked into Salesforce and get some use out of it. Yeah, I'm actually going to start researching Slack more. It's pretty interesting, and no, not because, you know, I'm into watching train wrecks or things like that, but really have an interest for how they're going to use this. And be interesting with the valuations going down, Daniel, on all of enterprise SaaS out there. Does Salesforce make a play to go end to end on SaaS, where Salesforce can be the operating system of the company?
It's interesting, and I just do a really quick boomerang on this one. But like, you know, you've got like the Workday side, or, you know, in the case of Oracle, they have the SCM, HCM, you know, stack. You know, Microsoft has a supply chain cloud, you know, the cloud, and they haven't really come out yet as Salesforce and said they're going to do this. So like right now, you would do like a Workday, Salesforce would be like American,
integration, to be
or SAP, you know, ERP and Salesforce. And I think that's been the typical thing. The question is, you know, is that a logical extension to the business that could help it scale and grow? And I think the answer is probably, but I think it's hard. I mean, those markets are HCM, and by the way, like that might be more achievable, by the way. But like the ERP side of the house, oh man, that is a sticky, difficult business to get into.
Yeah, and it's dug in there like a tick, right? Yeah. And it's really a 2-horse race right now with, well, actually probably a more of a 3-horse race. But yeah, it's tough. By the way, I don't mind boomerangs at all. I mean, this is you and I having conversations. We're not broadcasting. So
we are broadcasting our conversation.
All right. Well, hey, let's jump into HP earnings here. So, you know, it's funny, in the spirit of supply chain, right, which seems to be a trend here, the company did also have supply chains. But here's the good news. HP beat on the top and they beat on the bottom. Even though revenue was only up around 4%, you know, EPS was up 16%. PC had a good showing too, particularly commercial, very similar to Dell. Commercial was up 18%. But what dragged down the PC group was consumer lost 6 points. Okay, just, you know, that was a very different story with Dell, who actually grew in consumer. Notebook units were down 23%. Now, what is that really? Are those notebooks? Well, it's Chromebooks. That's what was down big time, and that's why that number was so crazy. Desktops were up 28%. What? Well, that's about commercial folks, because a lot of folks in commercial buy desktops, and either desktops for their information workers or desktops for the frontline workers at restaurants, at hospitals, right? Just to get stuff done, because they don't want people walking out with them, and they're a heck of a lot more durable than a notebook. Printing was tough all over the place. I mean, revenue was down 7%, hardware was down 23%, supplies down 6%. The positive news is almost $1 billion in operating profit for the quarter. One of the more interesting things, and just to put a positive note here, I really appreciated the company going into growth areas, right? It's the double click. And I think what this is hey, when you know there might be some deceleration, let's show some areas that are accelerating, right? So on the peripheral side, 40% revenue growth across HyperX and the HP peripherals. Gaming, double-digit revenue growth, right? Workforce solution, another double-digit. Consumer services like Instant Ink, also double-digit growth. Industrial graphics, another double-digit growth. Come on, just give me the number, HP. 3D up over 50% year on year, and cumulative annual parts 130 million. Okay, of 3D parts, plastic, metal, probably about 40 different substrates that you can use to do that. Personally, for the future, I'm most excited about the company's acquisition of Poly. I talked to 4 companies about acquiring Poly. I just thought the writing was on the wall, and imagine that the valuation got to a certain point, and boom, HP snagged the company. So there we go.
Yeah, I think you hit a lot of it on the head. You know, had the chance to do a little Q&A with CEO Enrique Lores. He generally does come out at the end of each quarter and give the breakdown to a group of us, you and I included, and it was mostly positive. And by the way, this is another one where the street was very positive. I think I think you can find some challenging spots in this, more so. There's more than like the Marvell report last week where you're like, I can't find anything wrong with this. But at the same time, I think the market's kind of embracing itself for this particular, for PCs to slow. Seeing the strong commercial numbers, though, indicates that there's still some tailwind in that particular space. Consumer is going to slow down. I am almost so confident that I'm going to say it emphatically that it will slow down. Commercial is going to be more, I think it's going to be more fragmented. I think parts of commercial will continue to be very important. I also think, probably one of the most important things, and you pointed this out earlier, Pat, but one of the most important things to watch right now is everybody's backlogs. Like, what made Dell's quarter so good was that not only did they hit these great numbers, but the backlog didn't get taken down. And some of these companies, the backlogs are starting to get drained a little bit. And when that happens, you're saying, well, yeah, we're getting good earnings still, but is it a combination? Is it actually because sales are strong now, or is it because they're able to fulfill orders? And then, of course, you get the combination of both, where the backlog's staying high and the numbers aren't great. And that means that, they're having supply chain problems and sales problems, which that's where you start to get really nervous. HP had a lot of good stuff in it.
They did.
Big bets looked good. Some of the new spaces it's going into, things like instant ink, device as a service. I like that stuff. The peripheral gaming business. Poly's going to be a bit of an interesting integration play. This remote work, hybrid work thing. HP is great with peripherals. So we'll see how they build that out. The future of video collaboration, remote work. I think Enrique literally said this quarter was fueled by hybrid and remote work. So, that's his words. So I think the continued belief that trend is going to sustain is there. I think it's in the numbers. I would like to see, the company's got to do something about getting that print business back to growth. The last few quarters have been a little, harder to digest there. Thank goodness for the good numbers in PC, because otherwise that would be even more exposed. And as we all know, like NVIDIA slowing growth in automotive, when you have data center and gaming exploding every quarter, you just kind of look at it, So, you kind of, because in the end, a company's performance is kind of the sum of all of its parts. But of course, if you're operating on, if you're operating at full momentum in all segments, your business tends to perform very well. So largely a good quarter here. And I said, the street, like I said earlier, validated that, because the market was favorable. And right now the market's not, it likes to take things down, not run them up right now.
Yeah. Hey, I want to do a rare correction in terms of what I said.
Go for it.
There was not a focus on supply chain issues in HP. I guess I got so used to supply chain being a challenge at HP, but that really was not part of the big conversation. And by the way, with Poly, they've had supply chain issues for 6 quarters.
Yeah.
And in fact, it hit their gross margins because they had to do spot buys of this. And I do think the combination of these companies, I think you will see a distinct change in the supply chain for Poly when the acquisition comes through. One of the biggest semiconductor suppliers to Poly is Qualcomm. Qualcomm is at the heart of almost every one of their new intelligent camera solutions. And you can imagine the relationship between HP and Qualcomm, and let's say Qualcomm and Poly, and for that matter, even companies like TI that are supplying a lot of this analog stuff. I think you're going to see a ton of benefit to. I'd love to see Poly not supply constrained to see what they could actually do, because people are coming into the office, Daniel, and the equipment sucks. I mean, the experience is horrible. We talk about equity in collaboration, and unless you have the latest and greatest equipment, it's not going to be one block, one person. It's going to be one block, 17 people in a conference room. You can't see them. You can't see their face. You can't see their articulations. You can't see everything.
Can't see that great smile of yours, buddy?
Exactly. I need to smile more. Hey, let's move to a company that absolutely knocked the freaking cover off the ball here, and that is Pure Storage.
If I wasn't so, exhausted, I would have gotten up and swung like a baseball swing right there.
Yeah.
I would have made it rain.
Yeah. I'd love to see people crush their earnings, right?
Well, I love to see companies do well. Of course, we had a great run of that during the pandemic. And now we're starting to, have to have some of the harder conversations, which sucks. It's like, if it keeps getting worse, man, we're just going to stop covering earnings, because we like to be the positive guys. It's like, oh my God, what a disaster. But, part of our job as analysts is we have to observe and analyze the market in both up and down directions. And, we try to find the strengths and the goods and advise how to help companies through all these different, gyrations and all this turbulence, but not a lot to advise here, just a lot of commending for Pure Storage. I mean, first of all, this is a company that's been on that kind of precipice of being in the black. And this quarter showed a pretty significant income, close to 80 million on around, what was it? I'm sorry, 620 million gross in revenue. That was a huge growth year over 50% growth. Which, by the way, when you start growing at that rate, when your run rate is $2.5 billion, that's pretty impressive for a storage-focused company. Now, this is a disruptive storage-focused company, but last year they had a loss in this quarter. It's basically break even this quarter. They did like 360,000 loss on 400 million. This time they actually did an $80 million gain or profit. So that was super impressive. This is a company, by the way, that what I love about Pure is how does a storage company also become a CX company? And so somewhere in its DNA, right? And we've had Charlie Giancarlo, CEO of Pure, on our summit a few times. But somewhere in the company's DNA, it became all about CX, customer service and net promoter score. And this thing is working for it. Basically, make our customers insanely happy in working with us, and we will keep growing. And that's what's happened here. So headwinds or no headwinds, companies are clearly spending more on storage, because this is a company that, saw 50% growth in this most recent quarter, and in a quarter where, other storage providers saw growth. So it also goes to show, by the way, some of those tailwinds about infrastructure, storage, data, making data accessible. I mean, their Portworx portfolio is super interesting, right? Container-based solutions for bringing storage and memory closer to compute, doing it in a modernized environment. That was a big acquisition for the company. And, that's going to be a very promising part of its story in the future. So that was another really good number for the company as well. Look, they're not as big of a portfolio as a Microsoft. So you can be kind of in this bit of a lane, but you and I, we've had these conversations with Micron, Pat, about memory. Pure is kind of a conversation here about, just how important is data and making data easily accessible, usable, using, modern technology so that when you basically need that access to that data, you can get access. Pure is really in it to be disruptive, to be easy to work with. And the customers are basically telling the story here. Customers are raising their hand and saying, we want to work with Pure. And so, I don't know that I need to, expound upon this much more, but 50% growth during a sort of teetering economic moment for a company that's, relatively small in this space in terms of size, but becoming an extremely big disruptive player to a lot of those legacy names, and is going to be a company that I believe you're going to have to keep an eye on.
Good stuff, Daniel. But, I want to talk about I mean, they beat 20% on the top line. And
Monumental.
while I know they vacillate between kind of profit and loss, I mean, the earnings surprise was 491%. Pretty impressive stuff. And here is a company that, you know, Daniel, you talked about CX, right? And they are a software company that happens to do a little bit of hardware. And doesn't that sound familiar, like Apple-esque, right? Where the magic comes in there. And did you know, Danny, you can ride the longevity of a pure subsystem, and you can get order of magnitude increases in performance with software upgrades. And that's the way they've done it. They built a chassis too, that if you need to replace the hardware, it's a bladed type of architecture. Interestingly enough, so what they do is they put a fast enough backplane, and they put a wide enough power range to be able to do that and actually do upgrades. And these customers actually do hardware upgrades in the middle of that chassis. They were also the first major player to do storage as a service, right? Pure as a service. Ta-da! Here we are. They were pretty much in front.
Is that what PaaS stands for? Pure as a service?
Maybe to them it does. But yeah. By the way, the storage folks are starting to use SaaS as storage as a service, and I'm like, no, maybe SaaS. Okay, SaaS is all taken up, folks. So please don't screw this up. So I am calling it today. It's not SaaS, storage as a service. It's SaaS or pure as a service, PaaS. Oh, that's not going to work either. But anyways, and subscription services, they're also way ahead of the industry. You saw the ARR at 29%. Subscriptions were up 35%. Anyways, this reminds me very much of our Marvell conversation that we had that we had last week. I don't know how to criticize this recent earnings. They knocked it out of the park.
Yeah, you know, it's okay. You know, sometimes, you know, you're trying to find a, you know, a pimple, you know, on perfect skin.
Yeah.
You know, and it's not there. So, you know, they're going to have quarters, and, you know, we'll have to snap back and say, oh, what happened? But, you know, right now the momentum seems to be in favor. And I do think this has something to do with that transformation of buying behavior, going back to like the HPE discussion about see, for Pure, there's not a big transformation because, like I said, it is mostly a service. So they're not weighing on the hardware. They're able to lean into the fact that, hey, you want a solution that you can subscribe to, OpEx, consumption-based, by the way, and be really happy that you work with us, because that's what we're focused on. You know, of course, I said that they're on this 2.5 billion trajectory, Pat. Now we'll ask them, can they keep growing like this when they're on a 10 billion and then on a 15 billion? To be seen. But
we'll see.
You know, so far, a lot to like about it.
Good stuff. So, hey, Daniel, here we are, buddy. Episode 125 in the bank. Don't forget, folks, you must go and sign up for the 6.5 Summit, the65summit.com. 72 speakers, 25 CEOs across 12 tracks. Come on in, lap it up. Come and get it. But hey, for this week, though,
come and get it. Register, www.the65summit.com. Join us. It is free to you. And we promise, by the way, you will have a great time. And if you can't make it to the event when it goes live next week, just know these videos will be available, will be on demand for a long time. We had millions of people watch our videos last year. And it was a lot of them during, Pat, but a lot of them came over time because this content, you know, it really is revolutionary. It is going to be amazing. So, buddy, it's Friday. I'm so glad we're back on schedule this week.
I know. How about that? Yeah, we've kind of turned this into an hour podcast, and I hope people can appreciate that. We do put out our super cuts of the different topics in case you just want to go to a different topic, and we also do chapters if you go to YouTube, where if you just want to skip to something different. But hey, for episode 125, for myself and Daniel Newman, have a great weekend. thanks for tuning in. If you like what you heard, hit that subscribe button. We're available on all relevant video and audio platforms. Have a great weekend, everybody.